cannabis has become more prominent in recent years as the legalization of cannabis and cannabis-related products has expanded across the United States. However, for cannabis business owners, there is this tax nightmare that they have to navigate known as Internal Revenue Code Section 280E. Now, to understand the impact, right, of Section 280E, it is important to first talk about the nature of cannabis, of the cannabis business, right? Cannabis is still federally illegal, although many states have legalized its use for medicinal or recreational purposes. As a result, cannabis businesses cannot take traditional business deductions such as rent or employee wages or even marketing expenses, right? Section 280E was originally passed in 1982 to prevent drug traffickers from deducting expenses related to their illegal drug trade, which makes perfect sense, right? But due to the federal illegality of cannabis, this has been applied to cannabis businesses as well. And this means that cannabis businesses are subject to significantly higher tax rates compared to traditional businesses. Since they can't take the same deductions as other businesses, they get taxed on their gross revenue rather than their net income. And that can be a devastating blow to, a cannabis business owner, particularly the smaller ones that are not able to absorb the same high costs as some of their larger competitors. And, the tax burden can lead to decreased profits, but in worst case scenarios, even bankruptcy. Now, despite the challenges posed by Section 280E, there are some strategies that cannabis business owners can employ to mitigate that impact. One option is to focus on minimizing costs wherever possible. That can reduce your taxable revenue. But another strategy we saw is for those to try to invest in research and development. But I'll be honest with you, only some R&D expenses are deductible under Section 280E, not all. I believe that the best way of dealing with 280E is by developing an effective tax strategy. Right? The strategy should include, but doesn't have to be limited to segregating expenses, cost accounting, seeking professional guidance, and changing your business structure, right? As legalization of cannabis continues to evolve, so does the tax law. Therefore, businesses have to remain informed and adjust their strategies accordingly, which can help minimize tax liability and maximize profitability. And that is the goal for all of us, right? So if you need help navigating the maze of complex tax and accounting or compliance and regulation, or you simply want more free information, send us an email at hello@420tax.com and be sure that you're following our page at 420 Tax and Accounting on LinkedIn.